Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Taking a look at the oil market, crude prices down by about 3.7% on the news from the Wall Street Journal that perhaps Iran is open to de-escalation with Israel. Let's get more on this with Wald, president of Transversal Consulting, joining us. Ellen, what kind of risk premium should be in the market for at least the short term?
Yeah, I think I wouldn't be surprised between like $2 and $4, kind of vacillating a bit. I mean, we're definitely in a situation of much higher risk than we were last month. But we have seen similar-ish situations before, and that's kind of the risk premium we saw. I do think that it does depend a lot on what happens in the Persian Gulf, other countries' reactions to it, and also, but it does seem that Iran continues to have the ability to export oil, and that's really what matters for oil prices, whether or not these supplies are disrupted. If they're not, then really it's just a risk premium. It's going to go up and down. I wouldn't be surprised if we see insurance rates for tankers go up, and that can also impact prices as well. But at the same time, it's just, I think we're kind of in the range of maybe $3-4.
The Straits of Hormuz, that's never been closed down in the past. Is the market, as far as you can tell when you talk to people in the industry, are they believe that is still going to be the case? That's still going to be, you're able to get your oil in and out of that strait?
Yeah, I think what's going on is people are very jittery, and it's every time there's any kind of military action in the Persian Gulf, that's kind of the worst case scenario that everyone jumps to. And I think a lot of that is a holdover from the '73 oil shocks, where oil was embargoed, and also from the Iran-Iraq war, where there was this tanker war, and essentially the U.S. military had to escort oil tankers out of the Persian Gulf to ensure their safety. I don't think that we have the same dynamic now because, first of all, China is a really big player. China is basically the largest customer. Asia is now the largest customer for these Persian Gulf producers. That includes Iran and Saudi Arabia and other ones. And you don't want to kick the nest when it comes to China. China is not going to like it if their ships are disrupted, if their access to oil is disrupted. And so they will put economic pressure to cool things down and to make sure that their economic needs and desires are protected there. So I think that's a new factor now that we haven't seen, that we didn't see in previous years. Mm-hmm. There's also a matter of, can they physically actually close the Straits of Hormuz? I would argue that it's not as easy as it seems, or as they say. They can definitely threaten ships, which can also be pretty bad, but you can't actually close it. Iran's not the only country that has ownership over the waters there, and you can actually reroute ships into Emirati and Omani waters. It would take some time, and during that logistical, inter period, it would be, we'd see higher oil prices, but I do believe it would work itself out in the end.
And there are some spare pipeline capacity through Saudi Arabia and the UAE to bypass the strait, but it is still relatively limited. Do we have a good sense as to whether Israel truly wants to strike oil and gas facilities? I mean, I know over the weekend we did see some of that, but nothing that truly disrupted production.
Right. And I think that's interesting. I think they're really walking a very close line because all of the facilities that they hit 2 gas processing plants in the South Pars gas field. They hit a fuel depot outside of Tehran, and they hit an oil refinery. And those all have domestic impacts because Iran doesn't export its natural gas. It uses it only for, electricity domestically. Iran has to make all of its own gasoline, et cetera. So you can see that their strikes are designed for maximum domestic effect, and that they have not touched Kharg Island, which is where the 90% of Iran's exports are loaded into tankers, and they haven't touched anything that would impact Iran's exports. Now, The question is, how long can they not touch them, either by accident or because the exports are a primary source of Iran's funding? And at a certain point, you got to go after their funding. And so I think that right now it's not on the table, but if there isn't any kind of resolution to this, I wouldn't be surprised to see them at least threaten it diplomatically or someone down the road.
Ellen, aside from the geopolitical risk there, what is underlying demand? What are the assumptions for underlying demand for the rest of the year for oil and gas?
It's a good question. I think we're in a pretty good demand situation. I do think, everyone's a little bit nervous about whether or not there might be a recession or not. And in that case, demand could go down. But otherwise, demand seems pretty stable. I think, there can be some variation depending on what happens in China or India. But in general, demand's pretty stable. Supply looks good as well. I don't think we're not in an oversupplied situation at this point, or not a massive oversupply situation. But likewise, we're not undersupplied either. And so I think prices seem to be pretty good for where they are. And I don't think, unless, I don't think that this issue in the Middle East, provided that it remains within kind of the confines where Iranian oil exports aren't hurt and Iran doesn't try to obstruct any other oil exports, that I don't see that we shouldn't really hit $100 a barrel, for example, because of this. I think that's not realistic.
So different than what we would have seen 10 years ago, 15 years ago. Ellen, before we let you go, what are the Saudis doing right now? How are they involved or not in these discussions?
The Saudis are probably involved. I wouldn't be surprised if they're talking to Russia, because they're very keen. They'd love to be, help broker some sort of a deal here. They are privately very happy that Israel attacked Iran's nuclear facilities. They don't want Iran having a nuclear weapon either, but they're not going to say that out loud. In private, in public, they are condemning Israel's attacks. But basically, I'd say they're focused on keeping their oil supplies, going and kind of to have a low profile.
All right, Ellen, thank you so much. We appreciate it. As always, Ellen Wald, president of Transversal Consulting and a senior fellow with the Atlantic Council.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Let's get to the markets here with the S&P up over 1%. Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federates Hermes, joins us. So, Phil, I was out Friday. If I pretended Friday didn't happen, the equity market's in the exact same place it was when it closed on Thursday. What do I make of that when there is actual severe geopolitical risk out there?
Well, as your previous guest just talked about, I guess there's an assumption that as dissettling as the Israeli attack of Iran was, maybe Iran, this is going to force them to the bargaining table. Point number one. Point number two, look at what transpired in the energy market. That in the first 4 or 5 months of the year, crude oil went from $80 a barrel down to $55. Then we spiked up to $77 on Friday. And now we're back down to $72. And if you think about what's gone on behind the scenes, we were talking about this at our morning meeting today. Over the last couple of months, the Saudis spurred OPEC to sort of oversupply the market with a lot of crude oil in each of the last 2 or 3 months. In the United States, very quietly, we have increased the size of our strategic petroleum reserve from 350 million barrels at the beginning of the year. We're now a little over 400 million barrels, I think, on our way back to peak capacity at about 720 million barrels. So you wonder whether or not the United States and the Saudis anticipated what transpired on Friday, or maybe had advance notice that something might happen, and it might not be a bad idea to make sure that there's some crude on hand in case there is some problems with the Straits of Hormuz, or the Iranians take their oil off the market, or whatever. And it looks like things are reasonably stable. And so as a result, the market's sort of bouncing back today. with the benefit of having had the weekend to think through, last Friday's developments.
Phil, it's been, if you look at the chart of the S&P 500 year to date, talk about a V bottom and recovery here, like we should talk about for the economy. I don't know. I was kind of surprised that we went down as much, and now I'm equally surprised that we came back as much and how quickly it all happened. You're an old pro. What do you make of what we've seen year to date?
Markets tend to overshoot on both sides, and we were disappointed with the market's response to the Liberation Day chaos. But look, frankly, the Trump administration did a poor job in orchestrating the implementation of that tariff announcement. So the market, in the absence of any knowledge, responded appropriately, down 15% in the space of a week. And then once we had a better sense of how that was going to work, along with how is the economy doing, the market rebounded back to what, we felt were more reasonable levels of valuation. Remember, Paul, we talked about this down at in Washington a couple of weeks ago.
Yep.
Our full year forecast for the S&P this year is still 6,500. We're sitting now a little bit over 6,000. So we've still got, 500 points, maybe 8 or 9% of potential appreciation over the course of the back half of the year. So there's more room for the market to continue to grind higher if the fundamentals continue to fall into place.
What's the safety right now? Are bonds portraying the safe haven bid, or does it have to be gold?
Well, gold's been the safe haven play for a while, and given any concerns about geopolitical risk or inflation, gold is the play. And so having a little bit of gold in your portfolio, I don't have any problem with a client taking that position. But certainly, if you think that there's going to be slower economic growth, certainly bonds should rally. Treasuries historically are a great safety play. We think that Treasury yields, benchmark 10s, are probably going to grind down towards 4% over the balance of the year. So I don't have a problem with investors holding both Treasuries and gold as sort of safe havens, given, the complete uncertainty and volatility of what, we've watched over the last 72 hours.
Phil, thanks so much. Always appreciate getting a few minutes of your time. Phil Orlando, he's a chief equity market strategist and head of client portfolio management at Federates Hermes, joining us there. We spoke to Phil when we were down in Washington a few weeks ago. He was there as well.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We're also, of course, paying attention to what's happening at the G7. We're waiting for a bilateral meeting to begin between President Trump and Canadian Prime Minister Mark Carney. Also, reports indicate that President Trump and Germany's Chancellor Friedrich Merz will be meeting this morning as well at the G7. So we'll bring you all of those headlines, of course, as they cross. All right, I want to get to the news, though, of the last few days, and that's what's happening with Iran and Israel. Lots of different reports coming out right now. Israel's continuing to strike despite reports that Iran would like to de-escalate. They've exchanged fire now for the fourth consecutive day, and this then raises the possibility and the risk of an all-out war that could drag the rest of the Middle East as well as Western nations into it. Ned Lazarus is Associate Professor of International Affairs at George Washington University, joining us now. Professor, what is your base case now, and what is the biggest risk?
Well, I think you brought in an important development, which is that there are reports that Iran, through other channels, through Arab neighbors, and also I've heard through Cyprus, is attempting to send messages to return to negotiations and to de-escalate. And to, according to some reports, is floating the idea that it will become more flexible in its stance on enriching uranium and nuclear development. So this, if correct, this is a signal that Israel's strikes are being felt acutely by the regime, which previously had, really seemed to be dragging out its talks with the Trump administration, not in any way willing to compromise on its desire to enrich uranium to very high levels and to maintain the option to break out to nuclear weaponization. Whether this will actually lead to a ceasefire, I think I would say that's unlikely for the moment. I think Israel initiated this this attack because of an opportunity that it was time limited and a threat that was time limited. So Israel sensed also from reports of the international inspectors that Iran was moving towards nuclear breakout or the ability to move quickly to nuclear breakout. And Israel also has an opportunity because Iran's entire strategy of maintaining these this network of regional proxies that could inflict damage on Israel in this kind of conflict had been weakened. Israel had taken Hezbollah out of the war, essentially out of commission. The Syrian regime of Assad collapsed because of what Israel did to Hezbollah, in essence, and Iran lost its ability to effectively defend its airspace when Israel responded effectively, if more quietly, to previous rounds of Iranian missile barrages.
Right.
So there's a time-limited opportunity, and I think Israel is going to maximize the damage that it can inflict on Iran's nuclear program and its regime.
Ned, would they even take it even further? I mean, if I'm Israel, I'm on a roll here. I mean, everywhere I look, I've been very aggressive. I've been very successful. You just mentioned some of the successes Israel's had against some of its enemies and the proxies and so on. Do I press my bets here and look for something bigger in Iran, whether it's regime change or really just decimating their military capabilities?
I think the latter, yes. I think right now, the Israeli Air Force is probably busy both with trying to do what it can to undermine the nuclear program, but also very much, I think, the Israeli Air Force is trying to take out the missile capacities, because Iran is certainly able to damage Israel. They've killed 24 Israelis in, a series of late-night missile barrages. Their capacity to fire, they can fire enough huge, massive missiles that all of the Israeli air defenses cannot hermetically prevent hits. And they've hit Tel Aviv, they've hit Haifa, they've hit an oil refinery. So Iran is capable of doing damage and is doing damage in a way that is painful for Israelis. Israel obviously has a tremendous military advantage, and they are able to hit strategic Iranian sites.
Right.
So yes, I think they will continue, and I think what they are hoping to do is really reduce Iran's capacity to strike back.
Ned, we got to leave it there. Thanks very much, Ned Lazarus, Associate Professor of International Affairs at George Washington University.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
All right, this is the gig here for the aerospace and airline industry. They get together every year, and they alternate between London, outside of London, and in Paris. Always in June, plenty of rosé flowing. How come they never meet in like Sheboygan in January?
I know, right?
So George Ferguson's over there every year. I send him over there, and he goes, and I don't know. But this is where the big deals happen. I mean, some big orders. And right now, Airbus is dominating the story, as it looks like Boeing is sitting out here as they deal with the crash of the Air India flight. Kate Duffy joins us, Bloomberg aviation reporter on this Paris Air Show. Again, I'm looking at your reporting, Kate, along with Sid and Lean. Airbus dominates air shows. Boeing sits out the order frenzy. Tell us about what Airbus is doing.
Yeah, absolutely. I mean, this has been a big win for Airbus currently in the show. So we've had order from Alix, which have signed for some A350 freighters and A320 family jets. Also, Riyadh Air order for 50 Airbus wide-body jets, and LOT as well, a Polish airline, for 40 A220s. And as you say, Boeing has really stepped back from the Paris Air Show this year following the 787 crash last week. So far, no orders have been announced, and executives are really slim in attendance. Ortberg obviously cancelled, and they've rolled back any sort of commercial announcements as they focus on really finding out what happened with the Air India crash.
So how much of sort of Airbus's triumph is Boeing issues, like what we saw with the 787 and Air India, and how much of it is just like everything was kind of going in this direction anyway, and Boeing just has so much runway to make up?
No, I think it was definitely a cause of what happened last week. There were potentially orders in the works, but this is all down to sort of what happened and executives taking the decision to not really take up the limelight this week because of the crash and the consequent deaths that did happen. So, yeah, there could be orders further down the line, but at the moment their main focus is trying to sort of sort out the situation in India.
So announcing big orders at these air shows is one thing. Actually delivering the planes is another. And it's not just Boeing that's got problems. Airbus has some production issues as well. Can you highlight kind of where Airbus is today in terms of their deliverables?
Yeah, absolutely. I mean, Airbus is also struggling just as much as Boeing is with the supply chain at the moment. It's something that's happening across all airlines. You know, they are struggling to get in these deliveries, and whether it be sort of wide bodies or narrow bodies, that is the real pinch point at the moment.
What do you think is, well, in general, I know this is the place where they unveil everything that's cool and it's always good, happy talk and all of that, but how is the aviation industry doing?
Aviation is doing well at the moment. I mean, what we're seeing here is a lot of eVTOL companies. That's the electric vertical takeoff and landing firms displaying and flying their aircraft around and having lots of interviews with the press. And that includes Vertical Aerospace and Archer. What we've seen is that they are particularly interested in sort of pointing their aircraft towards the defense sector and selling that to defense as they see sort of the growth in Europe that is coming from the defense industry. We're also seeing, as you say, lots of defense companies present. So it's doing well.
So how has the tone changed? Because now I might take a meeting if I'm an aerospace company with, I don't know, Italy, because now it looks like they're going to have to spend more on defense, Germany and all the others. Are different meetings taking place between, I don't know, the contractors themselves in various countries?
Yeah, there's lots of meetings taking place. I mean, we've seen executives on the ground, such as Airbus, Guillaume Faury, also Thales and Leonardo as well. What we're watching there, for example, is the possible space merger between those three and what could come of that. There's a huge space hub just further down the air show at the moment. So that's interesting. That's the first time that they've done it. We've also got the Ariane 5 on site. Lots of planes on display, people walking around private jets, people walking onto helicopters, and also sitting in the fighter jets too. But yeah, there are lots of business meetings happening. We're speaking to defense executives. They're meeting with other defense companies. So there's lots of collaboration in Europe. There's lots of cooperation and partnerships happening, and possibly, you know, chances of M&A happening in the near future too.
Really? That's quite interesting. What about U.S. defense companies? Like, if Europe wants to ramp up its defense budget, do they really want to do that with U.S. companies when there's still tariff issues?
I think that is a struggle at the moment. You know, we're sort of hearing that potentially there is more growth in Europe, and I think European companies want to find out more. You know, what other companies are out there to beef up their portfolios. For example, we spoke with Honeywell yesterday, and they have a lot of components on sort of fighter jets, and they were saying that they are looking at sort of M&A in and across Europe, and also expanding their own own existing capabilities as well. So factories in the UK, Germany, and Poland.
There we go. Okay. All right. Very good. We'll make that a nice, easy spot to get out. Kate Duffy, Bloomberg Aviation reporter on the Paris Air Show in Paris.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.